Hello again, fellow BeachBum traders. Thank you for joining us for our due diligence video on EXP World Holdings Inc., ticker symbol EXPI, where we want to investigate whether is EXP a stock to buy now or not, or wait, or what. So again, we'll go through our normal due diligence and we'll try to come to a conclusion as to is it EXP a stock to buy now or not, or wait. So please stick around to the end of the video, and again, we'll go through our whole standard due diligence, and then we'll come to our conclusions as to, as of October 1st, 2022, is EXP a stock to buy now or not, or wait, or what? So let's get started. Okay, so let's take a quick look at EXP World Holdings Inc.'s homepage. I'll leave the direct link to their homepage in the description box below so you can explore it further. We can see there's their ticker symbol EXPI, so they're highlighting that. We can see they announced record second quarter 2022 revenue, so they're highlighting that, so that's very positive. We see they're hosting an event in Vegas. We see their companies are EXP Realty, Verbella, Success. We see they're again highlighting their conference. We can see they're expanding globally. They expanded into Poland. They opened operations in Chile. And they had a shareholder summit. You can get their financials. They're highlighting innovation. Reimagining the ways business operate. People work together through cloud-based and virtual reality technology. So they're highlighting cloud-based and also virtual reality technologies and innovation. I don't see a whole lot of social media presence right here. So again, I'll leave the direct link in the description box below, and you can explore in their webpage in further detail. So I hope that all helps. Okay, let's do our standard due diligence on EXP World Holdings, ticker symbol EXPI, and ChartMill. I'll leave the direct link to their profile in ChartMill in the description box below. We see a quick overview of the technical analysis rating, which is very poor, 0 out of 5, and the setup rating is 2.5 out of 5 as of October 1st, 2022. We can also see a brief overview of the chart. So we see it's been very choppy. It's sitting below its moving average. It's sitting below the trend line. We can also see an overview of the fundamental analysis rating is 2.5 out of 5. So average. Valuation's poor, 0. Profitability is a little above average, 3 out of 5. Growth above average, 3.5 out of 5. And health 3.5, and it pays a dividend, but it's very low. So we also see an overview of market cap, very large market cap, 1.7 billion. PE is kind of high at 26. Forward is 19. Dividend yields 1.66 or about 1.7. We can also see a quick profile here. It operates a cloud-based real estate brokerage firm. They're in Washington in the U.S., etc. They IPO'd in 2011. They have a virtual reality software platform and also services, mortgage origination, title escrow, settlement services, brokerage services, also professional services, consulting services. They have a lease portfolio of office leases, etc. They have operations in the UK, so they have also some global operations. And again, it's mostly a cloud-based, internet-based company, residential real estate brokerage services. So that gives us kind of a good overview of EXP World Holdings Inc. And now we'll dig into their various components. Okay, if we look at the stock chart for EXP World Holdings Inc., ticker symbol EXPI, in a little more detail in stock chart, we can see recently it's been kind of oscillating around its 50-day simple moving average. It's recently broke down below that average. It's also been trending down. It's being rejected off this descending trend line. So it last rejected and then broke down below its moving average. It may be stabilizing here. We can take a further look and see if it's actually stabilizing at this time. If we zoom out a little bit to the weekly chart, we can see again it's been in a pretty steep decline for some period of time. This lower support has been providing good support. It's been bouncing off that descending support trend line, but it's also being rejected off the top of that narrowing channel. So these trend lines are providing good support resistance indication. So right now it's sitting near its upper resistance line, so the expectation would be that it would be bouncing down towards the lower support level at this point for in a longer term time frame. So again, we'll zoom out again, look at the monthly. So again, the monthly looks like it's a little bit declined. We see this steep decline. We see a much lower base. So gives us some indication of where the support resistance are, and we'll see that also in the technical analysis. Okay, if we look at the technical analysis for EXP World Holdings, ticker symbol EXPI, and ChartMill, we can see right now, as of October 1st, 2022, it has a technical rating of 0. It's a bad performer in the overall market. Both medium and short-term pictures are negative. So again, we see these downward trends in the charts. We see it has a decent value or average volume traded per day. Long-term and short-term trends are negative. It's underperforming other stocks. We see support resistance levels, so we can see it's currently trading around 12-ish or so, and it's got a resistance at 1181, 1256, 1440, 1488, 1681. We can see the setup is also it's showing 5 out of 10, but it's saying it's got a poor technical rating. The quality of the setup is only medium. At the moment, price movement has been too volatile to find nice entry and exit. Probably good idea to wait for consolidation. So again, that's ChartMill's recommendation. We see it's underperforming the industry. It's currently near its 52-week low. And it's been trading in a 1046 to 1410 range, which was quite wide. So we see all the recent trends are moving averages are down. So again, we see the technical analysis ratings, etc., except for very short term. The moving averages have been down. Okay, let's look at the fundamental analysis data for EXP World Holdings, ticker symbol EXPI, and ChartMill. We can see they're giving it a fundamental rating of 5 out of 10. Has a great financial health rating, but there are some minor concerns on profitability. Shows excellent growth, but it's valued quite expensive. So we can see health is very positive. Profitability is not bad. Growth is very good, but valuation is very poor, and it does have a small dividend. So again, they're saying it's expensive. Profitability showing 6 out of 10. Got good return on assets, good return on equity. Profit margin is in line, and Petrovsky F is average, is neutral. So it's performing well relative to the industry for return on assets, return on equity, but just average in terms of profit margin. In terms of valuation, it's getting a 0. The PE of 19, it's rather expensive. The book is valued correctly. Price to earnings, again, 26. That was forward at 19. The current is 26. So again, it's very expensive right now. It's higher than the industry average. Its growth doesn't compensate for its PEG ratio. Again, it's very enterprise to EBIT is valued more expensive than its industry. So again, in terms of value, it is underperforming the industry. In terms of growth rating, it's got a 7 out of 10. So it's got good growth. They're showing 29% on average per year for the next 5 years. Very strong growth in revenue, 67% growth in revenue. It's grown by 134% over the past 5 years. Very strong growth. So again, this could be considered definitely considered a growth stock. It's expected to show strong growth, 14% a year going forward. Earnings per share has grown by 2%, so that's neutral. Revenue growth in the upcoming 5 years appears to be decreasing, so that's at least a little bit of a negative. So we can see their revenue growth expectations. So it's grown very rapidly. It looks like it kind of peaked out in 21, but it's expected to continue to grow going forward. EPS, same thing. It was growing quite rapidly. Looks like it kind of peaked out. Looks like it's going to decline in 22 and then continue growth going forward. So again, this may account for the decline in price over the past year or so. So health rating at 7 out of 10. It's got a good quick ratio, good debt to equity, good Altman Z, very high. So there's not a solvency issue or bankruptcy issue. It's better than the industry average, and all of the other health ratings are pretty average neutral. It's outperforming the industry in most aspects except for current ratio, and it's got a very good Altman Z, so that's again very positive. There's not a solvency or bankruptcy issue there. Dividend, it has a small dividend that doesn't appear to be the focus. Looks like it's paying slightly less than industry in terms of dividend. It does look like it's increased its dividend, so that's positive. So the dividend has been increasing into 21. So again, it's small but positive in terms of a dividend. So again, fundamentally, it looks like it's a growth stock. It's healthy. It's just expensive at this point in time. So if we look at the analyst ratings in ChartMill for EXP World Holdings, ticker symbol EXPI, we can see it has an 82% buy consensus rating right now. We can see the median price target is about $26.52, so it's got plenty of upside, 136% upside. Even the low price target of 22 is almost 100% upside, and the high end of 29.40 is 162% upside. So plenty of upside in the analyst price targets for EXPI. Again, they reiterate these price targets. It's got 10 analysts, so it's got some coverage. It's not a ton of coverage. We see upgrades, downgrades pretty much maintains. We had some initiates. We've got 3 strong buys, 5 buys, 2 holds, no sells. So that's all very positive. And again, the trend looks generally stable to positive. So the analysts in general like EXPI. Okay, if we take a quick look at the ownership structure for EXP World Holdings Inc., ticker symbol EXPI and ChartMill, we can see it has a sizable insider ownership, so 51% is insiders, another 31% is institutional, and only about 18% is public/retail. So again, a lot of stability, got a lot of insider ownership and institutional ownership, so again, a lot of stability. It's got 151 shares outstanding and only 74 million in float. Again, 51% insiders, 31% institutional. Looks like a very small negative change in insiders and a significant positive change in institutional. So we see the institutional ownership has been increasing, so that's generally positive. Again, some negative, some sells by A couple of the insiders have sold recently in September and August, so you've got some insiders making some small sales. So that's generally perceived as being a little negative. But again, overall, the ownership should be pretty stable. Okay, so if we do our due diligence on EXP World Holdings, ticker symbol EXPI and Webull, this is the stock screen in Webull. So again, we look at EXPI, bring it up in the search bar. We can open up this lower panel and do some nice due diligence. We see their profile, etc. And I want to look at their financials. We can look at news, a quick view of their news, expansion in Poland, etc. So expanded to Chile. So we see some recent expansion news. Look at their financials. Looks like the income declined and they missed expectations recently. Possibly that explains some of the decline in the price recently. We look at their balance. Again, below expectations, but positive. So again, might be cause for the negative sentiment. Again, it looks like they're missing expectations, but again, their cash flow has been positive, relatively flat. Look at their net income, it's been declining, so that's a little bit of a negative. Revenue was very positive in Q2, so it was kind of declining and went positive. Operating income looks like it rebounded in Q2, so it looks like that's on a good trajectory. Their balance sheet, their debt to assets, it looks reasonably stable. Looks like their liabilities increased a little bit recently. Cash flow looks like it declined. Q1 or Q4 21 was their high point, and they had a bottom in Q1 of 22. Looks like a possible recovery. They looks like they lose money on their investments, but it recovered somewhat. Financing, again, looks like it's generally negative. We can see they're optionable, so you could write covered calls against your position to generate your own additional dividends. Look at the analysis. We've got 4 analysts in Webull. The consensus is buy, 50% buy, 25% strong buy, and then 25% hold. We see the high price target's 28, currently about 11.30, so plenty of upside in terms of analyst price targets. We see their history of dividends, so about a 4 to 5% or 4 to 5% dividend paid quarterly. And again, you can see their profile. So if we also look at their chart in Webull, we look at the month, we can see it's been a little choppy, but generally in decline. We zoom out farther to the year. Again, we can see it had been way up in the 50, 55, 56 range, went through a steep decline. Looks like it may have bounced off this bottom area around in the 11 area, and then went up to about 19 or so and has descended back down. So, it's got decent amount of upside. And we can see in the past it's been much higher, but then went through that steady decline. That's probably that fourth quarter 21. It looks like they had very positive results, and it's been declining since then. Looks like, again, it could be relatively stable around that 11 area, and it looks like it's got some upside into the high teens. So a decent risk reward. Downside area, it's could go down in the 8s, 7, 8 range. Just a quick reminder that as of the recording of this video on August 16th, Webull is currently offering up to 12 free stocks if you open and fund a new account in Webull. This is the most number of free stocks I've seen Webull offer. I don't know how long this offer will last, but if you're not already using Webull, here's an opportunity to get 12 free stocks. You can find our affiliate link to Webull in the description box below, on the About page on our YouTube channel, in the link section. Okay, let's do our due diligence for EXP World Holdings Inc., ticker symbol EXPI in FinViz. Again, I'll leave the direct link to their profile in FinViz in the description box below. If we take a quick look at their chart, we can see there's pretty stable support bottom, probably around 1250-ish. It's broken down below that. We can see, it was in a declining descending wedge, and it broke down below that bottom support level. Let's zoom out a little bit. You see it's kind of hugging that moving average, that shorter term moving average. Broke down a little bit. We see support levels around 1130-ish, and it's testing that. Next level of support's hard to determine, maybe 981-ish. So if we zoom further out, again, we can see that it was descending, tried to stabilize. We'll see if it stabilizes there. And again, we can see a potential next level of support around 981, and then, a bottom down in the $3 range, 345-ish. 331, etc. So if it does break down further, it could drop down to 981, and significantly below that, we can see it's below its longer term moving average. We can see it tested that and got rejected, and so it's again a negative downward pressure factors. So if we look at some of the metrics, about 1.8 billion, so pretty sizable market cap. 57 million in income, almost 5 billion in sales. So a lot of sales, pays a dividend of about 1.6%. It is optionable. Not a lot of debt. That's good. PEG ratios showing up red. PE's kind of high, 30. Price to books are showing red. Price to free cash flows showing green, positive. Looks like there's some discrepancy between the shares outstanding and the shares float, and there's a very high short float, so over 20% short float. Potential candidate for a kind of short squeeze. We can see its 52-week range is from 1106 to 55. So it does have, some downside to hit its 52-week low, but it's got, quite a bit of upside in the past year. So we see average volumes about 1 million. So if we scroll down, see if we see any significant news. So we see their expansion into Poland. Record second quarter. So that was positive in August. So some negative sentiment. So if we look at their profile, says EXP World Holdings together provides cloud-based real estate brokerage services to residential homeowners and home buyers, facilitates buyers in search of real-time property listings and sellers to list their properties. So again, this would indicate that this is going to be very sensitive to the retail real estate market. Offers buyers and sellers access to a network of professionals. Again, it's all, residential real estate, building 3D virtual worlds for work, education, and events, agent websites, consumer real estate portals. Got a print magazine, newsletters, podcast, digital training, affiliated social media, marketing, training, support services to brokers and agents. And in the US, Canada, UK, Australia, South Africa, India, Mexico, Portugal, France, Puerto Rico, Brazil, Italy, so Hong Kong, Colombia, Spain, so, a global in many different countries. Used to be EXP Realty International and changed to EXP World Holdings in 2016. Been around since 2008 and is based in Washington. So again, their focus is on residential real estate. This sounds like they're servicing both ends of that market, both homeowners, home sellers, home buyers, and agents, brokers, etc. So if we look at some of their metrics, their revenue's been increasing nicely. Cost of revenue, however, has also increased. Gross profit increased, and their EPS has been positive. It looks like a slight decline, but it is positive. So if we look at their quarterly, again, total revenue increased, cost went up significantly recently, and EPS has been positive, but it did decline and now looks like a pretty stable. Okay, if we do our due diligence for EXP World Holdings Inc., ticker symbol EXPI, and Seeking Alpha, and again, I'll leave the direct link to their profile in the description box below. We can see right offhand from their chart, it's been a major decline for the past year, almost down 74%. So we see that major decline. See their EPS is positive but very small. Their PE is pretty high, almost 38. It does pay a dividend. It's got about a 1.46 yield. It's got a market cap of about 1.8 billion and about 1 million in average volume. So if we look at some of the analysis and news, operating from a position of strength, risks from lower home inventory, value in real estate, tech leader, expands global operations to Poland. It looks like their last EPS, 0.6. It was positive but missed significantly. Revenue beat, so that's positive. Look at their ratings and grades. Seeking Alpha authors say buy. Wall Street says strong buy. Quants say hold. Valuations very poor, D minus. Growth very positive, A plus, and profitability A. So it looks like this is high growth, very profitable, but possibly overly expensive as the valuation is poor. But we've got some strong buys and buys. You can see the profile here. Again, it's a real estate services company. We look at their annual revenue. Looks like it's been growing nicely, expected to continue to grow. Look at the quarterly revenue. Looks like it was declining a little bit, had a nice bump in Q2 of 22, and looks like a slight decline going forward. We look at their EPS, their earnings. Again, looks like it was declining into the second quarter 22. Looks like it's pretty flat. Looks like it's expected to be relatively flat going forward. Look at the annual revenues. Again, looks like a expected decline in 22 and then a recovery in 23. So again, looks like a potential turnaround recovery type play going into 23. So again, you can see the year-on-year is negative in 22 and very positive in 23, 24 is what the expectation is. PE again is pretty high, 37, 31. Price to book is pretty good. Again, positive revenue. Revenue growth is positive. EPS is negative year-on-year. Levered free cash flow is positive. Gross profit is small but positive. Return on equity is good. Market cap again about 1.8 billion. Total debt about 3 million, so not a lot of debt. 134 million in cash, so they've got some cash. Enterprise value about 1.7 billion. Again, about a 1.46% dividend, paid quarterly. Payout ratio is 43%. It looks like it was a 5-cent dividend was the last dividend. Again, paid quarterly. Looks like about $1 million in average trading volume, so plenty of liquidity. Only 151 million shares outstanding, so not a huge amount. Look at the ownership structure. Looks like about 30% institutional, large percentage of insiders, 51%. Only a small percentage of retail, so only about 18%. So should be pretty stable ownership. Short interest is very high, so this is, right now has the potential for some short squeeze type, over 20% short interest, 14 days to cover. So again, a potential, right now, potential short squeeze type situation. The beta is very high. It's positive too, so it's going to move faster than its index. So again, high beta. And its Altman Z-score is very positive, so very little issues with solvency, bankruptcy, etc., which is again a very positive factor for this company. Revenue's positive, gross profits positive, earnings per share is positive. So again, net income, all positives. Not a lot of debt, positive cash per share. So all these look good. Debt to equity is low, so again, no debt issues. Looks like they lost a little money from investing, but they've got good free cash flow, so those are all positive factors. So okay, so based on all of our due diligence on EXP World Holdings Inc., is EXPI a stock to buy now or not, or wait, as of October 1st, 2022? Again, we saw it's been in decline. We saw that its earnings per share is expected to decline through 2022 and then recover in 2023. We saw in the charts and in the technical analysis that currently its technical analysis rating and setup are very poor. Again, it's been in decline. We also saw that it was being rejected off that upper trend line and that descending narrowing channel. So again, all these indications tell me, and again, this is just my opinion, not financial advice. We're not financial advisors, but again, my opinion, given all the due diligence that we just did on EXPI, I would say EXPI is not a stock to buy right now. Again, it's currently descending. It's in that descending channel. It's getting support from the lower trend line, getting rejected off the upper trend line. We would like to see it stabilize, swing back up. So I'd like to see it achieve a level of support and then swing back up. Again, as we mentioned, the expectation is that their earnings are going to continue to decline through 2022 and looks like they're going to recover and improve in 2023. So again, my conclusion right now would be to wait. It looks like it's a good growth stock. They have good growth. They are profitable. They have a good cash position. Their solvency didn't seem to be an issue. Their Altman Z-score was very positive. They've got a lot of institutional owners, a lot of insiders, etc. So again, it looks like this could be a really good turnaround play, a good growth stock going forward, but just not in 2022. It looks like this might be a potential good play to look at again in 2023. So perhaps we need to keep an eye on it, watch it, and see if we see that turnaround and continue back into growth in 2023. So again, let us know what you think of EXP World Holdings, ticker symbol EXPI. Do you think EXPI is a stock to buy now or not, or wait, or what? Let us know in the comments below, in our Discord, in our Facebook group, via social media. Do you have any other data that we should consider in making this decision? So again, let us know what you think. Did you find this information helpful? Is there additional information you would like to see in our due diligence of this stock or others? And are there other stocks and/or companies that you would like us to perform such a due diligence on? Again, please let us know in the comments below. Join our Discord. It's free to join. Let us know in our Discord, our Facebook group, via social media, etc. We hope this all helps. Good luck and have a great trading day. Bye. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right hand corner. Our latest video is available in the box in the lower left hand corner. We hope you like this and have a great day.